Unilever's CEO Alan Jope has received a 42% pay increase to nearly £5 million last year after the business exceeded growth expectations, thanks in part to price increases on its products in reaction to inflation. The news of his pay raise comes as Unilever faces shareholder criticism over its dwindling share price and a failed £50 billion offer for GlaxoSmithKline's consumer health unit late last year. According to Unilever's annual report released on Wednesday, Jope's total remuneration increased to £4.9 million in cash and shares in 2021 from $3.4 million the prior year due to an increase in incentive payments. For more on these stories, going to cross over to London, where we're joined by international financial analyst Opeoluwa Dapo Thomas. Ope, good morning to you. Thank you so much for joining us. I want to start with the oil, what's happening in the United States with the U.S. Pushing for shale producers to increase more. Jennifer Granholm at Sarah Week saying that they have to get more out there. What do you make of that that dynamic, as well as her also saying that the U.S. is also on the cusp of energy transition while asking oil producers to increase output? What do you make of it?
Well, I think it's a desperate measure from the United States government to dramatically switch policies. This is a shift of domestic policy and foreign policy. Over the few years, we've seen sanctions go to countries like Venezuela. We've seen question marks about the human rights violation by the Saudi prince. And now the US government is going to meet both of them and saying, please, can you increase oil? You're asking OPEC to increase oil. You're asking those at home to increase oil. Well, and like I said, it's very, very more like I said, it's a desperate measure to keep gasoline prices down because obviously, the midterms are coming soon. The elections are coming soon. Basically, most of them, they are tenure is on the line, and inflation is there, so they are worried about that, so they don't care about shifting the policy. But it's quite ironic because last year in Scotland at the climate change conference I was there, the energy most of these developed countries brought in was not very, very favorable to oil. It looks like they've bedeviled oil, but they forget that oil is not just a product. Oil is basically the foundation of the industrialization, and not just the foundation, it's basically the pillars that has strengthened the industrialization. People really do not understand the economy of oil, and it's showing in the US government policy shift. One gallon, 42-gallon barrel of oil can create 19.4 gallons of gasoline. The rest are used to make other products like bicycle tires, dresses, cassettes, motorcycle helmets. People do not know the derivatives of oil. Doesn't just lie in fuel or aviation fuel. It goes into other things. So you've bedeviled the sector for a while. You've said you want to make a transition, ignoring three things: price, value, and cost. And you say you want to make a transition to renewable clean energy. But then again, you don't know that it has implications, and they have realized these implications. Hence why they are backpedaling and saying, let's go back to increase oil supply.
Thanks, Dapo. The Amazon 20-for-1 stock split. What do you make of the decision from the company?
Well, stock splits basically are cosmetic. They basically do not add any type changes to the company. It's just a way of making the share price cheaper for future investors. I think the big deal is the $10 billion buyback program by Amazon, and that would basically raise the company's standing. And you saw yesterday the markets reacted to this 6% in trading, 6% in trading, and you've seen that Amazon is a big company. Other companies have done stock split. Tesla contemplated it last year. Apple did it 2 years ago, if I remember. And this is big for Amazon because it's the first stock split they have considered since the dot-com era. That was in 1999, and this is the fourth in their history since the IPO'd in 1997. So it's a big thing for Amazon, but like I said, it doesn't change anything in the fundamentals. It's just for new investors to come in and see cheaper stock prices and buy.
Oh, great. Now, there's been a lot of turmoil in the markets recently with everything going on in Ukraine. What do you make of the AT&T and the Discover deal, the reaction to the corporate bond offering?
So what we see right now is a growing imbalance of cash to invest and investment opportunities. And that's why this deal was very, very successful. In fact, from what I heard, there was a $106 billion worth of orders for this deal. But I mean, it was just a $30 billion bond deal. So basically that signals investors' appetite. Basically they're saying, okay, yes, we're interested in bonds like this because most of them yield over US Treasury. So for example, this particular deal has a 40-year security tenure, and it yields 3.25% over a US Treasury bill. So that's basically a good deal for investors. And this will signal more companies to, what would I call it, look for bond offerings like this, and shows that yes, investors still have cash to spend and splurge.
And executive pay is sometimes a divisive topic. What do you make of the 42% pay increase for the Unilever CEO, Alan Jope?
Well, in Europe right now, we're in a competitive industry, and people need to understand that you have to keep your best talent. It's a global pool. Obviously, you wouldn't want to lose your CEO to a rival, so you have to do anything to keep him, especially as he has fulfilled his own metrics of increasing the growth targets of Unilever. So last year, they performed well. He's exceeded his sales growth targets, and this guy, he's rewarded 42% for it. So basically, that puts him at £5 million. And most of it's not in cash; it goes into stock and rewards and stuff like that. But people need to understand the context of this, what would I call it, this pay rise, because the last CEO of Unilever was earning about £11 million, and this guy is earning £5 million. So wow. It's not quite as dramatic as people think it is. So it's a reward for, what do you call it, for improving this thing, and like I said, it will improve employees' morale and say, okay, if we get our targets, basically Unilever increased their prices as inflation came in, and if you get their targets and increase their sales production, and yes, the share price is going down, but that's not in their control. All they have to do is to make sales, cash flow, and those are the key metrics that we use to judge companies.
All right, makes sense. Opeoluwa Dapo Thomas, international financial analyst, joining us from London. Thank you so much for your time. Appreciate you taking us through those headlines.